morning, ladies and gentlemen. A very warm welcome to all on Business Today Television. Now that the record high is there on the Indian markets, one thing is for clear. The way forward from here on seems to be on balance on the higher side rather than profit booking. 2025 has been a painful year for Indian equities. It continues to be painful for small and mid cap stockholders. The large caps are doing very well. But to discuss this and a lot more, ladies and gentlemen, we are now joined by Ms. Punita Kumar Sinha, Managing Partner at Pacific Paradigm Advisors. She is a very, very long-term participant as well as active watcher of all global assets and invests globally in different asset classes. The right person to ask what Wall Street is doing and what Dalal Street might end up doing over the next 6 months to 1 year. Namaste to you, Punita ji. As always, it's such a pleasure to interact with you. How are you reading sentiment on Dalal Street at this point of time against the backdrop of a record high and a record low on the rupee? So two diverging trends.
Well, I was just looking at the markets in India and comparing them to global markets, and we've been one of the worst performing markets this year. But if you look at the last 3 months and the last 1 month, the momentum is shifting back to in favor of Indian equities versus global equities. So while global markets have been down over the last, say, 1 week, and India has been flattish to slightly up. So I think the tide has turned. We've had a difficult year in Indian equities relative to all the other markets, partly because we had outperformed and our valuations weren't cheap. And that's really what has also caused the correction in the small and mid caps, because the valuation premium to even from the small caps to relative to the large caps had been become very high. And whenever the valuation disparities deviate significantly from the averages, then you see that reverse, and that's what we've seen happen. But as I said, if you look at the momentum, Indian markets have turned relative to other markets. The correction that we've seen in some of the other markets over the last 1 week, 1 month, India has actually held up. I do believe that Indian equities could start outperforming from here on into 2026. And definitely next year could be better.
Yes, ma'am, before we get into the nitty-gritty of Dalal Street, I would just like to understand your thought process on what's happening on Wall Street. We've seen a very sharp correction in the Nasdaq, in risk assets such as Bitcoin, in the Magnificent Seven stocks such as Nvidia, Facebook, Meta, Tesla in particular. What's the broader underlying sentiment on Wall Street, and how is it likely to impact India?
Well, first of all, today that sentiment has reversed and everything was up very strongly. All the risk on was trade was very, very much there in the US. And so I don't think that this correction in the AI related stocks and the tech stocks is sort of a trend that will stay. Is very much right now, the momentum is still there. And if you speak to everybody on Wall Street, there is a big debate, of course, going on AI and what that means for markets, what that means for economies, what that means for jobs. So the AI and whether it's a bubble or not is actually the most important topic of discussion, and that will impact US and global markets, I think, into 2026 quite significantly. Is AI a bubble or not? And that is, nobody really has a clear answer. Everybody realizes that the valuations of AI-related tech stocks are very high, and but at the same time, everyone also realizes AI is transformational, and it's a force like the internet, and could stay, at elevated valuations, and the investment can keep coming. So nobody's really getting that nervous that they'll start selling aggressively. But of course, everybody is very mindful of the valuations and is keeping an eye on it.
Ma'am, while the exact top and the exact bottom of any sector or any market is an event in hindsight, but smart investors such as you who have seen previous bust ups like the dot-com one or the global financial crisis in 2008, the dot-com bubble that burst in March 2001, do you see any worrying signposts in the market? Meta is raising debt to fund its AI expansion. Nvidia fell very sharply after a strong performance. OpenAI is looking for government support to boost its very, very ambitious plans. Are you reading the tea leaves in a manner which says that I would be more worried than, how should I say, bullish in this AI space?
I mean, definitely valuations. I mean, there's no doubt that AI is a theme that's here to stay. And it's also the fact that the companies that are not investing in AI are going to fall behind. So everybody is trying to catch up to that investment wave. And so more investment will happen. And to fund that investment, companies, even the ones that were cash rich, the ones like you mentioned, are now resorting to raising debt. No one wants to be left behind. So it's actually taken on a huge momentum of its own and a life of its own, and everyone's running to chase it. So the question really is, are valuations discounting the growth that is happening in AI, and whether the earnings will come through of the companies? And that might take a lot longer. And valuations of many of these AI stocks are irrational at some level. They're very hard to explain, but I don't think it's like a lot of the companies in India, the new age technology companies in India, that the stocks are doing well, but the earnings are not there, the profits are not there. So AI is in the same way like all other new age technologies, where the returns will come later, but the investment has to happen now. And does that mean it'll be rocky from time to time? Yes, it will be rocky. It can be rocky. And that's why we're seeing so much volatility in the markets. And that's why we're also at some level seeing safe havens like gold, silver, US dollar also rise at the same time, because there is enough volatility to create concern for many investors that at the same time as they're investing in technology, AI, and risky stocks, they're also investing in safe haven asset classes to hedge.
Okay. That more or less defines what the AI universe is doing at this point of time. Before we get into the nitty-gritty of Dalal Street, ma'am, a view on gold and silver. These were hard assets that gave supernormal returns in 2025, putting a lot of equity fund managers on the back foot. Given the slight improvement in geopolitics, what is your prognosis of gold and silver for maybe the next 18 to 24 months?
So I'm not a commodity expert, and I'm also not a metals expert, but I think given that the volatility is rising, given that risk is rising, longer term, I mean 18 months is a long term in terms of how one can far one can look out, given these trends are so new and so transformational and dynamic. I think that the potential for gold and silver to go up remains, especially given the risks as they rise due to AI and the valuations as they rise. But at the same time, as you said, the geopolitical situations, not as bad as it seemed 6 months ago. And at the same time, the economies are also like the Indian economy, US economy, they are, expecting rate cuts. So there is a push and pull both ways, which means gold and silver could also be volatile. But the trend, I think, over the next year is that it could rise some more, because I think we will see volatility increase.
Okay, so that's the macro that's been set against the backdrop of how Dalal Street is likely to perform. Ma'am, this is a traditional bull market where we've seen, large caps take lead, blue chips like Bharti, like M&M, State Bank of India in particular, have led this fresh record high on the Nifty. What's your gut feel about this move that has come post the GST rejig, post many other good macro trends that all of us track? How do you see sentiment these days on the Dalal Street? Are better days ahead?
Yes, I think so. I think the sentiment is definitely improving. We've had a relative underperformance of Indian equities, but the flows in India remain strong, and the FIIs also, I think, will start to come back to India, given that valuations are now looking a little better. And more importantly, I think our macro situation is quite stable. So the Indian economy is in good shape. There are no excesses right now that we should be worried about, that we were worried about, say, a year ago on the valuation side. Those excesses have been kind of gotten cleared out. The small and mid-cap sector, where there were excesses, has also underperformed. So there also, I think, things are looking relatively better. And versus many of the other economies, I think India's domestic economy remains a big shelter for any global shocks. We have our strong domestic economy, and we have strong domestic market inflows that keep coming from the SIPs. So I think from that perspective, India should do much better. The only thing that, one is still waiting to see is the tariff situation, how that resolves itself. I think even there, I'm hopeful that where we started off and the worst point of the tariffs being as high as, 50% or more, it's already, likely that it'll be below 25% in some cases. And so our exporters, which have been hurting, could also see some relief.
Okay. Now, where do you think fresh money should go into the whole universe of stocks? Will it be based on the third quarter earnings, or should there be a secular inflow of money?
I don't, from the companies that I am been studying, and I don't see third quarter earnings be hugely different than the second quarter earnings. So I think I don't see any risks there, and also no real breakouts. I think we are in a sort of steady state as far as earnings are concerned, slightly improving, no real, it's not like turnaround situations that are required at this point. So barring that, I think, and valuations being better, definitely, I think one of the sectors that is still not expensive is the financial services sector, bankings and BFCs, even asset managers. Of course, there's a lot of IPOs coming in the asset management space, which could take up some flows. away from some of the other financial sector stocks. But I think this sector is relatively safe and not expensive. And then I think even mid and small caps, which have corrected, there is some value emerging there. And again, one has to be selective and one can find opportunities. And then I think it has to be a stock specific market. And one can find enough opportunity across different sectors. But longer term, I still believe that the India domestic consumption story is a good place to be, including sectors like healthcare. And of course, if you want to take on a risky trade, I think exporters, if the tariff negotiations finally result in a good outcome, I think that sector will rally, and that could be a short-term trade.
Okay. Now, your response prompts my next question. I don't think so there would be anybody in a better position than you to comment on the impending Indo-US trade deal. Is it happening?
I don't know. Nobody can predict how the political leaders negotiate, especially President Trump. So it's very hard to predict. But I think the tone is in the right direction. And I think India is too big an economy to ignore, and therefore there will be some kind of a resolution.
Okay. Okay, fair point. Now, what is your thought process on the IT, domestic IT sector, of course, export oriented, against the backdrop of this slight weakening in the global AI trade and possibly very, very good valuations after a fairly sharp fall? Is that on your radar?
I think valuation definitely provides support to the IT sector, but I think one will again have to be company specific, because some companies are trying to leverage this AI trend by innovating more and helping their clients use technology to help productivity. And then some IT companies are not being able to keep up, and there they are seeing, obviously we are seeing pressure on those companies. So I think it's a mixed bag. I think definitely while the valuation support is there and these companies might perform simply with any positive news flow, I think longer term it's a challenging sector until Indian IT companies can find ways to offset the impact of AI on their customers and the kinds of solutions that the Indian companies will need to provide. I think the Indian companies need to innovate more. I don't think they're innovating as fast as they need to.
Yeah, I think that cold shoulder from the market is more or less getting reflected in how frontline IT companies stock prices have behaved over the last 2 years or so. Fair point. Innovation is the mother of all future growth, and more so in the world of stocks and the listed space. Ma'am, you briefly mentioned that financials look good. How are you playing that theme? How do public sector banks fall in this setup? Has your fund taken position in large Indian PSU banks? How does that sector pan out for you?
I think one of the positive things for the PSU banks is that relaxation of some amount of FII limits, because FIIs, ran into some constraints in terms of being able to buy into PSUs when they hit those limits. So I think as those limits are getting relaxed, that would bring more money from at least FIIs into some of the PSU banks. But again, valuations are decent, but I would say that the way to invest in the financial sector is not to just bet on just PSU banks. You have banks, you have NBFCs, you have asset managers, you have a whole host of fintechs. So it's a very broad space, and there is growth in many of those areas, and not just PSU banks.
Okay, so in terms of allocation to financials, Indian financials in particular, what's your funds weightage, and within the financial space, how much goes to NBFCs, how much goes to banks?
So I'm advising a bunch of different strategies, and each strategy has its own mandate, and so I can't generalize like that. I would say that in general, one should be overweighted.
Okay. Fair point. That's well explained. What is it that you don't like at this point of time? What is not on your radar despite Q3, despite strong macro tailwinds, despite maybe us seeing the worst behind us? What is it that you don't like?
That's an interesting question. As I said, every sector has some pockets of opportunity. So there's no one sector that I would say that I don't like, but I still maybe don't see the huge opportunity other than valuations in IT. I mean, there is valuation support, and so they might start performing well on any positive news. Even the pharma, the domestic healthcare sector looks to me better than the pharma sector, that the generics, where I think we have steady growth, but nothing breaking out. Neither in IT nor in pharma. I don't think that we're going to have exponential growth. We could have much more growth in the domestic oriented sectors rather than the export oriented sectors. So I would still remain focused on the domestic sectors, but keeping in mind that one should have some share of exporters, because valuations are attractive and the trade deal could be favorable.
Ma'am, my next question follows your answer, which is the trade deal and exporters. Foreign institutional investors such as yours have been, sadly missing in this rally, which is fueled by a lot of domestic money, ma'am. Given the record low of the rupee, the fact that we haven't done anything in the emerging market space relative to many other markets, what is the on balance view about FIIs returning to Dalal Street? Is it possible?
Oh yeah, I think it's already started, and as I said earlier on, that the valuations of India are relatively looking better. We've had our share of underperformance in India, and I think valuations always bring money, and right now attractive. I won't say we have attractive valuations, but relatively to other markets, our valuations are not as bad as they were. So I think that will eventually bring money back into India.
Okay. And my final question, ma'am, 18 months from now, 24 months from now, where do you see us in terms of the Nifty, maybe the Sensex, and of course the rupee?
I can't predict the rupee, but I think Sensex and Nifty, again, in isolation, it's very hard to predict relative to other markets. I think we'll be outperforming some of the other markets, but in absolute terms, it's very hard to say, because if there is an AI bust and there's a crash, as a lot of people are worrying about, that the AI related euphoria could end up pretty badly in the stock market, and that the US markets could see some correction, then of course India cannot buck the trend, but we may not fall as much because the excesses that are being felt in some of the other areas in the world, we are not seeing that in India. So I think we are a stable economy, and we over the last 30-40 years have proven that on a long term, medium term, we continue to give between 12 to 15, we could easily give between 10 to 15% return CAGR over a long term trend. Whether that will happen year on year, it's hard to say, but I think it's proven to be a good market to be invested in for the long term.
Right. On that optimistic note, Punita ji, thank you so much for your time, and let's hope that we see better days on the Lal Street, given the sideways to weak move that we've seen over the last 14 months, and that this bull market flourishes ahead. Thank you for your time and have a nice day.
Thank you. Thank you.
That, ladies and gentlemen, was Ms. Punita Kumar Sinha, Managing Partner at Pacific Paradigm Advisors, talking to us about her view forward in both Wall Street and the Lal Street. Please stay glued to Business Today Television. There's a lot that's happening on the other side of this break. The market's flat as flat can be on the monthly expiry day. Thank you.
Markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth